Alright guys, so today we'll be discussing an ADX based strategy which provided results like this: 1302 in Tesla, Microsoft, Walmart, J&J, and the list just goes on.
So before we start our strategy, let's just go through a rough idea on what an ADX is. So basically ADX measures the strength of a trend. So if it's above a certain number, then the trend is strong, and if it's below a certain number, the trend is weak. So the ADX has got three values that it normally returns. So one is a minus DI and plus DI, and then the other is the ADX number. So the plus DI and the minus DI is basically to see which direction the market is going. Is it going to the upside or is it going to the downside? But we'll mostly likely be focusing on the ADX value. So in normal terms, the ADX value, whenever it's above 25, they is said to be the trend is strong, and whenever the trend is weak, the ADX is generally below 20. So we're going to use that as a value, but in our strategy, we're going to change the values. We're going to change this 25 to some other value. And the other thing we're going to change is, again, traditionally, just as in RSI indicators, they use 14 periods. So ADX also uses 14 periods. We're going to change that as well because of our optimizational advantage we have as quant traders. So other than that, there's nothing much. If you guys want to check out the minute details of every single thing in the equation, you can go ahead and check this out on Investopedia. But as of now, all you need to understand is that the plus DI and the minus DI helps determine the trend direction, and the ADX over 25 is a strong trend, and ADX over below 20 is a weak trend, and that's that. So if you want to check out more free strategies, then feel free to check out our YouTube channel. I've posted many strategies which include dungeon breakouts, pullbacks, TMA CD, and also like small ones like stop loss, how to set a stop loss or a trailing stop loss, or even Stan Weinstein strategy. If you have time, check out our quant program website. We have 3 courses available, and the Prometheus course is possibly one of the best courses we have. We talk about the optimization and forward testing and Monte Carlo simulation. Along with that, you get 10 strategies that beat the market. So let's start. So what we need to do is click on open and then create new strategy. So just put this above here, and then what I want you to do is, this is version 5, so we're going to code this in version 4. So I'm just going to write in version 4 because many people still haven't adopted the version 5 yet. But if you want to learn about the version 5, the full tutorial is available on our YouTube channel. So anybody who is new to coding in version 5 can learn about it. I'll put that link in the description. So just delete off all these things. The strategy is my strategy. I'm going to remove these things as well. So the overlay equals true. Let's put overlay equals true. It's fine. We're not doing an indicator anyway. So let's declare some values. So the first value I'm going to do is the number of days. So a strategy, to be honest, is pretty simple. A strategy, I'm just going to write down my strategy so you guys know. So first we'll do a confirmation of whether we are in the upward momentum. So confirmation of momentum. So that we achieve by making sure that the close is above the close of X amount of days. So plus, and then we're going to give the ADX filter. So if the ADX is above a certain number, it's greater than a certain number, so just give it N, and the close is about the 200-day moving average. So the close is greater than 200 MA. Then we enter long. And then the exit is going to be pretty simple as well. So we'll come to that in a bit. So let's first declare some of the values which will be necessary for us to code the strategy. So in order to make changes easy for you guys when you code, so you can make the changes in the settings section when you play around with the values. I would like to put input these things so that the user or the individual can make the changes. He doesn't have to come to the code to make the changes. So input, so title, so I need to give a name to it. So the name will be days, and then the type. So we need to declare the type of the value we're inputting. So apologies for that. So type equals input.integer. So we need to put an integer value. So integer is anything that's a number. So 1, 2, 3, 4, 5. Our integer float will be decimal points and everything. So we'll just do integer. So when we do that, we can see it becomes red, which is good. And then we can also declare a default value. So default value I want is 30. So def value equals 30. And then let's create so that's for the momentum confirmation. And then let's do the simple moving average one, which is a 200-day moving average. So again, we can get that from the individual or the user. So same procedure, title equals MA period. Title, oh, what am I doing? Title equals MA period. And again, the type will be integer. So I'm just going to copy paste all these things so we don't have to waste the time. Copy and paste. So leave a comma here, and this here will be 200. So we got the SMA value, but we also have to initiate that SMA function. So for that, it's pretty simple. It's just SMA close comma SMA P, which is this value here, which is 200, and we can store this in a value. We can call it SMA, I don't know, SMA val. Okay, so there you go. And then let's do the ADX part of it. So I'm just going to give 2 enter to it so that it's a completely different section. So what I'm going to do is I'm going to do DMI function. So DMI 5,5. So what's a DMI? So DMI is basically the function that returns the directional moving index. So it returns three things here. So basically it returns the positive directional movement, the negative directional movement, and the average directional movement. So we're looking for the ADX, which is the average directional movement. So I'm going to store this. So because the 3 values it returns are basically the tuple, so we need an array which has got 3 values. So let's call it DI plus, comma, DI minus, comma, ADX. So these 3 values, like the DI plus, which is the first value, positive one, that gets stored to DI plus. The negative value gets stored to DI minus, and the ADX, which is the last one, gets stored into the ADX value. So that's all there is to it in initiating the ADX section as well. And now we can combine this and go for the strategy.long and strategy.short. So basically, it's a genuine question. Hey, why did you choose 5 and 5? Why did you choose 30? Why did you choose 200? Well, I've discussed this in a previous video. I think maybe the pullback strategy, or I think it's the MACD strategy. So how I find these values is by using a quantitative analysis called optimization, and also forward testing. So what I do is I put a computer code, different values of 30, can be 29, can be 28, and also these DMI values can be 10, 15, doesn't matter. The normal values are 14, and then I tell the computer to tell me, hey, this is the best value that works for Tesla, or this specific stock, or that specific stock. So again, that result really helps me in the backtest, but there's a huge problem with that, and that is called over optimization. The process is called optimization. The other thing is called curve fitting. So the problem essentially becomes curve fitting because the strategy is suited only for Tesla. It might not be suited for other products. So what we need to do is we need to do forward testing. Again, this is taught in our course. So what we'll do is that we'll apply the strategy the past 2 years and run it this year, or the past 5 years and run it for 2 years, and then optimize again. So depending on the changes of the market conditions, it adopts accordingly. So in our course, we do optimization in different periods so that we get an idea on how it performs in different time intervals, and also during the black swan events like the global financial crisis or dot-com bubble or the 2020 crash, so that we get an idea on how these optimization and walkover analysis works. But are we done there? No. So then I have to perform a Monte Carlo simulation. So I'm doing all these 3 things, and then on top of that, I'm doing a portfolio backtest. So not just on Tesla, I'm doing it over random thousands of stocks over many years to figure out whether this strategy is authentic or not. So you can see the process that I go through to find these values and then come up with these values. Now, are there better values than this? Absolutely, which obviously I can't give away, but that's for you guys to find out by doing these process of 1, optimization, 2, forward testing, 3, Monte Carlo simulation, and finally portfolio backtest. So anyways, that's all there is to that. Now let's code the strategy. So all we need is if condition. So the first one is confirmation momentum. So if close is greater than close of days. So it checks the close of 30 days ago, and if the close is greater than that, then that condition is there. And then we use an AND condition. So AND condition ADX is greater than 50. So the reason why I'm going for greater than 50 is one, my optimization, forward testing and Monte Carlo simulation and portfolio testing backs this number. But are there better numbers? Absolutely. The reason why I believe higher ADX numbers is good is because it filters away this, even the Investopedia says, 25 plus is better or 25 plus is good. Sometimes you can see a slight up move and people think here is the start of the trend. But when you go higher numbers, when you go like 40, 50, 60, what that gives you is that you can really, really confirm that the trend does exist. And that's really good thing. So combining these two here, okay, there's a breakout happening here and there's a momentum. And two, we've got a trend filter as well through the ADX is greater than 50. So it's not going through consolidation anymore. It's for sure beginning to trend. So those two conditions are met, and then I also need a condition in which, if the stock is extremely underperforming, we need to get out of the trades. For that, basically, it's just if close is close is greater than SMA val, which is something that we created here. So close is less than 200-day moving average. I want to exit. I want to enter the position. So I'm only picking healthy stocks. So anything below 200-day moving average, I don't believe is quite healthy. They might be healthy, which is basically what value investing does. They find out stocks which are underperforming and not underperforming, basically undervalued, and then they buy up those stocks. So that's value investing. But as quants, we can't analyze the fundamentals of every single company. So our basic theory being that, hey, if the close is about the 200-day moving average, at least the company is performing well, or people think the company is performing well. So we're taking behavioral economics into this factor as well. So if these conditions are met, you do the entry. So when you go to the next line, make sure you hit tab or 4 spaces. And then you write strategy.entry long. Going to call the name, so basically long, and then comma strategy.long. So that's it. So we've got the entry condition. Now exit condition, I'm going to do it very simply because I want to run the profits as much as I can. So you see these big moves here in Tesla. I want to be participating in that move. So there are better exit, but I'm going to leave that to you. I use a completely different exit, but even this exit works. It's a very simple exit, and that's just basically closes less than SMA val. We exit the trade. So strategy.exit, and what trade are we exiting? We're exiting the long trade. So there you go. So strategy.entry, and yeah. So gonna give a name to this. So ADX trend YouTube, ADX trend YouTube. Okay. So I'm gonna save this. Hopefully there's no errors going on. Save that. So strategy.exit should have, oh yeah, so basically strategy.close. So for exit, you need to declare many of these profit limits and loss and stops of everything. So all you need to do is strategy.close. So that should sort out that problem. Hopefully there is no errors. Yep. So I'm going to add this to the chart. Okay, so we've got results here, but these numbers, there's a small flaw in that. So the numbers is, I've talked about this in the MACD strategy and the pullback strategy. So the numbers is compared to $100,000. So, and it's traded with one contract. So what happens is that for one contract, and when you compare it to 100,000 or 1 million, the value is so small. So this percentage numbers are quite wrong. Same thing goes for the drawdown. So this drawdown is much higher. So what we need to do is we need to change this to 100% equity. And now what you basically get is the actual result. So you've got the net profit and the drawdown. So you can see the drawdown is 42%. So never look at the dollar value. Always look at the percentage. These numbers can be trusted, the 21, 23 for profit factor, but always look at the percentage numbers, 42.91 and the net profit. So if you change this 100,000 to 10 million, still you see the percentage hasn't changed. It's exact same percentage. So dollar value has changed, but don't look at the dollar value, look at the percentage value. However, if you change this to 10,000 or even 1,000, so this is 10,000, the value will be almost be the same. You can see a small reduction in the returns, and that's because of rounding of the decimal points. Even if I change this to 1,000, again there might be a small change, but again rounding of numbers. But net it'll come around the same value if you look at the maximum drawdown, the net profit, percentage profitable, and the profit factor. So there you go. So this strategy works pretty well in Tesla. Now what I'm going to do is I'm going to just check if my trades are working perfectly well. So I'm going to add this indicator ADX. So ADX, so that's average directional index. So we did 5 and 5. So I'm going to change the settings to 5 and 5. Okay. Then just go to Pine Editor. So our close is greater than close 30 days ago. So let's just compare here. Let's just take one of the recent trades here. So close is higher than the close 30 days ago. Okay. And then ADX is greater than 50. So let's compare this. Okay, here the ADX is 57. So that's correct. And then the close is greater than 200-day moving average, which is this line here. So basically it has given us the long signal. So by the looks of it, Tesla tomorrow will be close because it's close below the 200-day moving average. So let's see some of the other variables in the strategy tester. Let's see the performance summary. So we'll get an idea on how this has worked. So the thing that I need to look is the average winning trade and average losing trade. So that'll give me the ratio win to ratio of loss. So you can see the average winning trade is 390, average losing trade is just 30, so which is really good. Let's take the case of the largest winning trade. The largest winning trade is 577 and the largest losing trade is 15%, which is also good. So the percentage profitable is very less, but that's expected in momentum-based trend following kind of strategies. On mean reversion strategies, however, you're looking for more percentage profit. You're looking for 60, 70, 80%. But the average win and average loss will be close to each other. It won't be that high risk reward ratio kind of a trade. So there it is. Basically, you've got the ADX trend strategy. Now let's check it for other markets as well. So I'm going to check it. So first thing what I do is, and I actually check it in any strategy that I create for stocks. Here's a huge tip for you, massive tip. Any strategy that you do for stocks, I think the first thing you should do is check on SPY. So here, the SPY, it works perfectly well in the SPY. It's not that great of a return, but it's still positive. The drawdowns is minimal, which is good. The percentage profitable and profit factor is good. So then I check QQQ because S&P 500 has got 500 stock in it. QQQ has got all the NASDAQ stocks in the NASDAQ 100. So basically, if it works in these two, generally it will work everything. So IWM is a Russell. Again, not that great returns, but still it looks positive. So now I'll go check randomly across different stocks. So again, PayPal, Facebook. Now, obviously, I have done portfolio backtesting in AMI Broker, so I've randomly checked across 1,000 stocks over many years, so I know this works. But just for you guys who are not coding in AMI Broker, who are viewing Tradingview as their coding platform, and that's pretty much the problem with Tradingview. Tradingview is not meant for quants; it's just basic coding and basic charting. But if you want to really be a great quant trader, you need to invest in products like either AMI Broker or learn Python. Python is quite intensive in coding, so you have to choose your drink really. So there you go, Facebook, JP Morgan. So obviously there'll be stocks which it doesn't perform that well, and that's why you need to diversify across stocks. So the more you diversify, the better. So we recommend at least diversify one strategy over 20 stocks to a maximum of even 100 stocks. It doesn't matter. The more diversification you have, the more you can minimize this drawdown and get more of a stable net profit. And the equity curve will also be smooth. So let's see where it hasn't performed well. So I think Boeing is one of the, Alibaba Group is one of the areas where it has underperformed. So it's always expected in some stocks it won't perform well. And the reason why is Alibaba has
just been listed since 2014, but it spent a considerable amount of time from March 21 all the way to April 22 below the 200-day moving average. So it didn't pick up the big moves really, and that's why the 200-day moving average is very critical. It kind of protects your portfolio from a down move. So again, Tesla, again, we've checked it before. Microsoft, again, substantial rate returns. That's why the portfolio diversification is so important. So even though in Alibaba it underperformed very badly, but in Microsoft you can see some spectacular returns. The profit factor of 5.5. Walmart again performed very well. Johnson & Johnson. So this is the beauty of portfolio diversification. I don't have to explain it to most of the traders here. Look at this. Look at Home Depot, how amazingly well it performed. So hopefully you got a gist, you got the idea. So we've reached the end of the video, and I will be uploading lots of videos on Tradingview Pinescript and also in Python as well, because there are lots of developments in AI technology for quantitative traders. So make sure you subscribe to it so you get notified of those videos as well. So have a great day. Thanks so much for watching. Bye-bye.